G'day, ladies and gentlemen. Welcome to Finance But Neat, the home of the greatest lubricators of conversation, whiskey and money.
I was hoping that's the direction you're going with that one.
My name is Alex Watson, and joining me as always is Bindi Holland.
Cool. Well, today's topic is all about equity, which is cool. Very relevant subject for us to be talking about right now. So I'm very excited. But here's the thing about equity. It's not really wealth until it's working for you. If someone's been in their home for a few years and they haven't had today's conversation with their broker, they could be leaving a serious amount of money sitting on the table. But first, before we get into that, we'll do barbecue chats. Today, I want to talk to you about growing with the market. You and I both have someone in our lives that works with a lot of workplace payouts, work cover, that kind of thing, like people getting windfalls. And just recently what we've seen is an example of someone who is expecting a cash payout, quite a significant one at that. And therefore what they chose to do was actually sell their entire property portfolio because they knew with this cash payout they would actually be able to then re-enter the market in the way that they wanted to. And so they did that in advance, almost as preparation for this payout. Unfortunately, what we've actually seen is that was 5 years ago. And you know the changes we've had in the market in the last 5 years, right? So what they sold versus what they're going to be entering back into is an entirely different ball game.
They sold in 2021?
Yeah, close to, yeah.
Before or after?
Before. Yeah.
Yeah. So in 2021, I was CommBank. Market went crazy. I left in 21 for Westpac, and I remember during that period speaking to people who wanted to get pre-approved to wait for the opportunity where the market would collapse again and then reinvest and buy in property, getting ready to sell. I've never seen it work, firstly. I think just as a concept of buying, selling, waiting for the market to move, it's impossible to time the market. And even the most conservative financial people in the market, they're like, well, if you're going to sell, why not move now? Yeah. Like, the Dave Ramsey, the anti-debt guy, right, in the US, he was saying the other day, he's like, well, is this a real plan to move states? They're like, no, we want to sell to get rid of our debt. And he's like, why? Learn the money management skills, pay that off and move and sell at the same time. Don't sell, clear off, wait for an opportunity. Yeah. You just can't play Nostradamus with the market. Yeah. You just can't.
Well, this was my question is, if you can afford to keep a hand, at least one hand in the market, like should you do it so you grow with it? Like, I know that's going to be different for every situation, but it's something to consider, right? Is if you have at least one property, you're growing with the market.
Yeah, I think, 2 podcasts ago we spoke about upgrading, selling, all that kind of stuff. Like, where are you putting that money in the meantime? Yeah. You're going to spend some of it.
Yeah.
You're going to. I spoke to a client the other day who was talking about selling and talking about selling, doing something with the money, and I just said, that's right. I just said I said to them, you've been through a really, really hard few years. It's absolutely the right decision to sell. What are you doing with that money? Like, have you got a financial planner? Just making sure they've got the right advice coming at them to where to put it. And we're talking through that. And I just said, awesome. As long as you're not going to buy a caravan with it. The husband blushed, like, straight away. And he got a whack on the arm. Yeah. And it's like, you go through a hard couple of years, you've got something going on in your world where, like, you might be injured or, this couple, like, they've had some big stuff going on. And I think I see, like, a lot of times, this person we know, like, they will chat to people who have gone through, like, injury claims and, they're seeing dollar signs for suing and all this kind of stuff. like even my brother, he's got a tradie that he works with who's missing part of his pinky.
Yeah.
Got a massive payout. It set him up financially, and it's a rare situation that you get as big of a payout. Like you have to lose a digit or a limb or something to get as big of a payout there. And he just said every day of the week I'd rather have my finger back.
I know.
Like,
I know. It's
you'd
really
think you'd think, oh yeah, just take that, right?
Yeah.
Like
No.
yeah. No, you want it back. But the reality is he's done something wise with it. Every time I chat to someone, they always go, I just need to let the pressure valve off and go, I'll buy a caravan out of this. And like it just doesn't work.
Well, I feel like hindsight's obviously a beautiful thing, and if everyone could see what the next 5 years would look like, they would make different decisions. And I know that's real, but these, you know, this particular person that we're talking about, in reality, you got to live somewhere, right?
Yep.
They sold properties and they have cash in the bank from selling them, but they've got to live somewhere, which means they've been renting for 5 years. And
what are the chances that money that they got from liquidating properties is in shares?
Oh, I'd say low. Yeah. And the other thing that I can't help but think is like whenever you're getting...
We're not that smart, are we? Like I sometimes think this.
Oh,
Brian and I will chat about this, and the math doesn't math. And I got a participation award out of high school.
Yeah.
Like
we went to public school.
Yeah. Your kids go to public school.
Yes, I'm fine with it.
I was fine with it until mine got accepted.
Yeah. Now you've got that one little flex on top of me. Yeah.
But no, like it's, you know, I got an OP21. Like, I literally got like
is
I'm
that
not
bad?
Out of 25.
Oh, is it one's good, right?
Yes. Yeah. And I got a 3.
Yeah.
Yeah.
This is why you.
Yeah, but she went to Craigsley, so. She would have gotten a 1 at my school, I think. But the reality is I don't think I'm that smart. It's just logic. It's just what makes sense. What does the math say? Let's ditch emotion.
Yeah.
Like it's not an emotional
emotion
decision.
Is a huge...
It's
financial.
financial.
I mean, when you're dealing with some sort of crisis, it's hard not to be led by emotion, right?
Yeah.
Like,
my intro should have been the 2 greatest lubricators of decision making.
Emotions.
Emotional, like financial pressure.
Yeah.
And whiskey.
I think they actually say like there's like every single purchase that someone makes is driven by emotion. Like none of them aren't.
Yeah.
They all have emotion in them. But yeah, I just can't help but think like when someone's injured and they're getting a payout, the purpose of the payout is to relieve pressure for the rest of their life on their like need to work as hard as they did or as differently as they did or whatever. Like that's the point of the payout. It's to compensate them for what they now can't do.
Yeah.
And like these people, they will be absolutely able to enter the market again. Like they will, and they'll do really well, like for sure.
Yeah.
But I just can't help but think that if they had just kept even just one house in the market, they would now be paying off a very small debt versus buying a house for today's prices.
It's this whole concept, I think, bit of an old school concept of stewardship. Like just taking a step back from your money and going, you know, I think we should really dive into this a little bit deeper another time around careers, professions and all that kind of stuff. But going, what is my business? Because mortgage broking, funded finance, it's my profession.
Yeah.
My business is the money that we pay ourselves to survive and live in and where we spend and all that kind of stuff. And I think ultimately, if you look professionally at, you know, how you do that, you take a step back, you start managing it differently, you start stewarding it, you stop making these kind of dopamine get out of jail decisions because you're under pressure. You go, actually, what is the next right thing to do? Yeah. And to my mind, I always like to think of what pilots do in like a disaster. You know, in aviation, there's this thing like they've got this triage process that they've got to go through, like, you know, check engines, all this kind of jazz when a Mayday emergency happens. Step 1 every single time is aviate. Keep flying the plane. Right. And I think when a disaster happens in our world, step 1 should always, okay, how do we keep this plane flying? Yeah. And how do we steward what we've got as best as we could? Years ago, I sat in, this is the last time I stopped shaving when I was a mobile banker. I sat in this family, this household, where this woman had been given some sort of lung disease situation, like diagnosis. She had decided that she wasn't going to live beyond 2 years, and it had been 5-6 years since she got diagnosed. She decided that she wasn't going to live, and I could tell the husband was at the end of his tether.
Yeah.
And what she'd done is she'd just gone and lived life, maxed out her credit card. They had this giant 15 grand credit card debt. He was a Queensland Health public servant. She had been a teacher, and they had no way to get the income to clear it up. Like, he was on, this is circa 2019. Like, he would have been on 60-ish grand a year. And one of the things that I said was, guys, you need to close this credit card, and you need to actually start managing your money successfully, because having a credit card is not going to work for you. Like, it's just not going to work. You've got plenty of equity. Yeah, we can do it, but you need to close this credit card for me to go. This is why. Because I, rightly or wrongly, I will not do a credit card debt consolidation if you are going to keep it open.
Yeah.
And I've been in trouble for that over the years at Bankland. But I always take the test that we learnt years ago. Could we do it? Yes. Should we do it? Absolutely not.
Yeah, because if someone got themselves into that position, it's fair enough to say they will do it again.
Yeah.
Yeah. Actually, on the subject of windfalls, I actually had, I saw a similar thing back in the day where there was a payout of some sorts, and her first move was, I've got all this credit card debt, I've got all this personal unsecured debt. Pay it off because it's costing me interest and I can't get rid of it, and da-da-da. And actually a financial planner said exactly what you just said, is if you've managed to get yourself in this situation, you're going to do it again.
Yeah.
You're better off keeping the credit cards and learning your lesson in paying them off, and putting all of this money into bonds or something like that, so that when you have learnt the lesson, you've still got the money, rather than use this money to learn the lesson.
Yeah.
And I was very, very, very new to finance at that point, and I thought, whoa, there's a whole different way of thinking about it.
It's a really wise way. I think the whole discussion around finances and optimizing and leverage and everything quite often misses what is the next right thing in a wise manner to do with my finances. Like we've seen over the years people come to us and go, I'm about to inherit like $1 million. I want to buy this house now. And they've already spent the inheritance, and they're trying to use that when they've got no income to justify the purchase. Like, I'm almost of the opinion, like if I won the lotto tomorrow, I'm calling my financial planner, and I'm not spending a cent. I'm probably paying my home out, but we're investing everything. Like, literally just put in the shares, 12 months. Let's get used to this real normality. Let's keep running this business as usual, because I know in 50 years' time, if I blow up this business to go live a lifestyle that from lotto, it's all going to be gone. Yeah. I don't want my lifestyle to change. Like, let's actually steward this for long term. Let's keep it for long term.
Yeah. I think your analogy with the pilot, that's really profound. It is just, if there is some sort of disaster, rather than letting that emotion drive your decision making, it's let's just keep flying the plane in the same direction that we were, and try and keep everything as it is, and make whatever tweaks we have to do to adjust and land safely in our new position. But let's not just let go of the wheel and forget about it.
Well, and this isn't finance related, but I do wonder if that couple is still together. And their parting thing to me when I said I wouldn't do it was, well, this is why I don't shave.
I was actually wondering how that tied in.
I just realised. Their parting thing to me was, look, we know you're a senior mobile banker, but, like, you are quite young. Is there anyone older and more experienced? Didn't softball that to anyone. But it's just like, hey, I'm really curious as to whether that relationship is still around. They had one daughter. They lived in like in Newmarket, inner city, Windsor. Right. They'd been there forever. It wasn't an income thing. They just owned that home for a long time. Lovely home. And your actions have just said, I actually value my current comfort because I think I'm in trauma response and dopamine and like I can't handle this. I value my current comfort more than my daughter's future and my husband's finances once I am gone, if that's the response. And I think just knowing how your actions affect them long-term financially and show them where your priorities are, like that's a big, big piece.
Yeah.
So.
Yeah. Well, I guess back to today's topic, equity.
Yeah.
Here's something that I see a lot of, and I'm actually very guilty of this type of mentality myself. It's something that I constantly have to work on in multiple areas of my life. But if I'm going to think about using the equity that I've got in my property to buy another house or whatever, my first thought would be, let's start cleaning things up so I'm ready for that. As in, let's, a lot of people want to pay off if they've got a credit card, or if they've got a small unsecured debt, they want to pay that off and tidy it up. Some people might want to reduce some of their discretional spending that they've been using, that they've been living at large for the last few weeks, whatever. They want to tidy that back up to show that they can make a higher repayment. Even the one that really gets me is always if I'm close to a particular milestone in paying off my home loan, my existing debt down, I want to reach that milestone before I start a conversation because that was my goal or whatever. But I'm just keen to hear from you as a broker. Like, when is it in this huge journey of people's thoughts? When do you actually want to speak to them and start putting your influence on things?
Before you actually make any decisions. I think you never know what that move will unsettle. And so we've had clients in the past where they've come to me and gone, hey, we've just gotten 50 grand. We're going to go and pay this off. And then we feel like we can buy a house. And I have no issue with paying debt off. I think it's a wise thing to do. But I think you need to know that if you came back to me in 6 months, said, hey, we paid the car off. And I go, awesome. Well, you've not got enough cash to buy it.
We need that money.
We need more cash. How would you feel about that? And so it's not about helping. It's not about making the decision for the client. It's about letting them know what that decision will actually do and
how it affects their options.
Yeah. So if I went to someone, hey, you can buy a house now, or you can buy a house in 2 years' time if you pay your car off. Most people are going to go, well, I'm probably going to pay my car off in 2 years anyway. Yeah. Might as well buy the house now and get the growth, get into the market now.
Yeah. And in reality, like what we've seen happen.
Yeah.
In 2 years, maybe you actually can't. Maybe you pay the car off and you can't buy the house anymore because you need to have triple the deposit or something.
One of the examples that I always come back to is like, you walk into a branch, the branch doesn't do the right thing historically and get you to a lender. Instead, the teller or the CSS or whoever the front person is tries to give you a little bit of wisdom that they picked up in the lunchroom, which we've both seen those conversations, right? And they go, oh, you just need to save 5%, another conversation. And, just focus on paying off your debt. And I don't think I could count the amount of times I've had that advice being given when I worked in Bankland, and then they come back to me and go, I did everything the bank told me to do. 6 months later, I'm like, I could have gotten you into a house 6 months later and now you don't have enough cash. If you had spent that, like, honestly, save the money. It's always the thing, right? Save the money, but be really clear and defined around what you're working towards, because you can make financial decisions, all this type of stuff. Like living expenses is a big one. All I need to do is have a discussion so you understand what's discretionary and not. We're not going to grill it and go, you can't because of this past history behavior. Like, we're not going to roadblock, but we're just going to really have a good conversation around, okay, do you understand what's discretionary within your budget? Absolutely, Alex, I do. Awesome. What do you actually need to spend to live by? And I think that's a really, really big thing around what is the decision-making process. Well, let's just actually get clarity. Clarity is a gift.
Well, I mean, it makes sense rather than just trying to figure it out on your own. It actually does make sense to get an understanding of what are my options in each scenario. the reality is maybe you do put that money towards paying off the debt. Maybe that is the best thing, or maybe that's just what you want to do and you choose to do it anyway. But at least you're making an informed decision after you've sort of heard your options.
And everyone's got like, there's a lot of cope in the world for how we spend. Like there's a lot of cope, and most of it is generally, oh, my kids.
Yeah.
Like that's the biggest cope. You know, Kmart is a very, very big beneficiary of that.
Yeah.
But like just, I think if you've got the equity and you've got the borrowing capacity and you can see a clear path to the cash flow, why wouldn't you just act now?
Yeah.
Like Anna and I are in a bit of a crossroads at the moment where bought our house 2019, got a huge amount of equity out of that move. Like so thankful we bought when we bought, where we bought. Probably could have done a little bit better, but like we're north, south, we want to go wherever we want. We're 20 minutes away from everything. It's awesome.
Yeah.
I started looking the last few months going, okay, we're outside of where the first home buyer guarantee stuff is impacting at the moment, price range.
As in like your...
No, price range. So my house
right.
is not increasing as aggressively as a lot of the investment properties that have been bought over the last 6 months. So we've seen a huge increase since October of properties increasing in that 700 to 800 mark, closer to $1 million, because the first home buyer guarantee gives you the ability to negotiate up to that. So it's been a huge increase there. We're not feeling that, and we've been quite stagnant. And so because we spent the last, 4 years since the girls were born, building, like paying for IVF, buying the business, starting the business, doing all this, getting that going.
Putting them in a public school. A private school, sorry.
Do you know how much cheaper it is than daycare?
Is it actually?
Yeah.
Oh, daycare is the worst, isn't it?
I think we figured out we're going from 24 grand a year or something stupid with daycare to 6,000 a year.
Well, when you put it like that.
Yeah.
Yeah.
Yeah. Even kindy this year.
Really? I thought there was like all these fantastic kindy things.
No, kindy this year is saving us a ton compared to last year. Yeah, our savings is like... It's good to know that I'm not actually the financial problem, and that it is.
It is the kids. Yeah.
But it's man, I don't need a tangent, Bindi.
Sorry.
So like, that was a really good stream of.
Sorry.
Where was I?
You were talking about IVF and all the things
so
you
we
spent
were
money on.
investing into these things. We're going, hey, we can see the market going crazy. But we're in the market without an occupied house. Yeah. We're investing into the business. We invested into having kids. Now we're investing into the business. The business is getting to this mature stage, year 3. Cash flow's going well, ongoing revenue. It's all feeling a lot more comfortable. Yeah. And I've realised that our property is not increasing in value. Right. And I'm going, I've got the equity. I can see a clear path to the cash flow. Borrowing capacity's there. The next call was our financial advisor to put a plan in place. Yeah. And the only reason I went financial advisor first is because I know my borrowing capacity. Yeah. Like as soon as I got my financials, I ran it like this year. And I actually need someone to be in between Anna and I, because I know what the options are, and I'm not going to educate my wife well. Yeah. Like it's going to be heavily biased. I'm going to get grumpy and angry. I need a tiebreaker on that conversation, which that's what we're doing. So I think just looking we've got the borrowing capacity, we've got the equity. I've had some investment cope as like I've gone, hey, this is why I'm not doing investment properties. And now I'm going, all right, I've got super, I've got borrowing capacity there. I've got personal, we can get all of our equity out, and as a physio, so we've got some more ability to get equity up to 90% there. What are the pathways and options that we can go through? I've got way too many options, so I've just gone, give me a plan. Yeah.
Dan and I are in a bit of a spot as well, actually, in that when I was working full time, and we both were, we had certainly borrowing capacity. We've never had a borrowing capacity issue. We've always kept any debts very minimal, if at all. Like whether the vanilla customers, good income, very little debts, etc. And our problem was we were having to save to get back into the market after a stint of like 8 years out of the market almost. So a long time. In saying that, it didn't.
I'm not gonna spill the tea, but that phone call when you wanted to buy a property was one of my. I still think it's one of my favorite conversations. Just.
I'm very glad.
You're very frenetic.
Yeah, I'm just very glad that we got back in when we did. Like, we made a good move there. And what it's resulted in is we're in this position now where we have so much equity in this property. And we should be doing something with it. But actually, our incomes aren't where they used to be. And that was by design as well. Like, that's part of the plan. And I actually really want to maintain that. And I don't necessarily want to work as much as what I was. And I guess one of my questions is, and maybe I can use this platform as a place for me to learn as well, but like what is it that I can do with like accessing my equity to actually increase my borrowing capacity if my income is not exactly where it used to be for whatever reason? Do you know what I mean?
Yeah.
Like, is there things that I can do in terms of cross-collateralizing versus cash out that actually influences my borrowing capacity?
I think the biggest thing that you haven't done is you haven't used the equity already and incorrectly. It is financially, it makes a lot of sense. And this is the whole optimal situation. If you optimized your financial world, you would never get a car loan, you'd use equity. No one has paid off a car loan attached to a house over a 30-year loan term in 3-4 years.
Unless they put it separately.
I've never seen it. My comment stands. Like, maybe a very rare few.
Yeah. Because that temptation of putting your repayment over 30 years and not really noticing the car being bought is so strong. Yeah. Yeah.
And so I think, like, that's kind of step one. And this is first home buyers. Like, we say it all the time. Just do the next right thing, invest well, cash flow renos, do all that, get equity. So you guys have done some smart things in terms of you got into the market, you made moves, sweet, all good to go. I think realistically, like, everyone is so different that it's just a borrowing capacity analysis.
Right.
And then, like, the equity side of things, I'll get RP data, it'll take 2 minutes. I'll figure out if I don't, like, just using my local knowledge around the country, sometimes I look at places and go, this doesn't seem right. Like, I did that to a place in Adelaide the other day. I was looking at the price going, I don't think this estate is kept up with the surrounding areas on RP data. Let's have a quick look. And the client was like, yeah, it's worth way more than what that's saying online. Like, clients always know what their property's worth. Yeah. They'll inflate it slightly. Yeah. Everyone's got the best
and then
house.
some, yeah.
But everyone knows what their property's really worth out there. And I think once you start kind of, like, you get the equity really quickly, you get it, like, literally 5 minutes, I'll run through just the questions that I ask everyone around borrowing capacity. See, it's not even, I don't even need the right answer. I'm just trying to figure out what you know about your finances so I can ask for certain documents and, you know, kind of go down that rabbit hole a little bit. But the reality is, like, within 10 minutes, we know exactly where you stand and we can start going, okay, we can structurally access X amount of equity, which is more than sufficient. So what do we need to nail that next purchase, and what does that overarching strategy look like? So do we need to access equity separately because we've got a better borrowing capacity rate over here? Do we need to restructure your own occupied home to maximize borrowing capacity? What are you comfortable with? What is your need, your goal, and, like, balancing all that and doing the right thing by the client compared with, do we need to restructure everything? Maybe we've got plenty of equity, and, like, I've got clients who they just don't want 3 loans, 4 loans, 5 loans, right?
Yeah.
And I think the industry has done a really poor job of actually giving people that option, or explaining why that option is the best in terms of accessing equity and going to another bank or cross-collateralizing. Yeah. It's very, very kind of poorly done. But accessing equity, super easy. It's more than, like, it's really just a paper exercise mirrored by physical cash coming out, getting ready for that next purchase, deciding what the next purchase looks like, and taking action with the right buyer's agent and expert that's helping you put the strategy together.
Yeah. Cool. I mean, strategy is a whole nother thing, I suppose, that I suppose your mum and dad investor, like, wouldn't know where to start with.
I don't know where to start with.
Yeah, well, you do. You've got connections.
Well, I know who to start with.
Yeah,
Yeah.
right.
I think that's the reality. And
Yeah.
When we talked about, like, earlier about people wanting to buy property
Mm-hmm.
and invest and they're waiting for the right opportunity, it's just like it's almost a fool's errand, because by the time that you know the property market is moving,
Yeah.
you're dealing with lagging indicators.
Yeah.
Not like I guarantee you don't have the relationships that you need to get the change indicators. You're always going to, I don't know what that word should be, but you're always going to get lagging indicators through data.
Mm-hmm.
Otherwise, you're relying on anecdotal evidence up front to know the market's moving.
Yeah.
So, like, what are you going to trust there? So there's no, in my mind, there's never been a point in terms of, like, can I do it? Should I do it? Is this the right timing? It's, hey, there's an opportunity. Let's investigate it and see what we can do. And whatever that opportunity looks like, let's take action and not get stuck in that analysis paralysis.
Yeah. And maybe as well, just it's like a mindset thing. You have to go into it holding it loosely, like putting your effort into it, but holding it loosely, and that if it doesn't work out, it's not the right thing. It's just a learning curve to whatever is.
Yeah. I don't know. We've had a couple of clients choose not to go down that path of investing in the last few months.
Yeah, okay.
And I got no issues. Ultimately, I think they will.
Yeah.
But they probably got to get... I don't think in each of those cases, I don't think they can see the pathway to cash flow being okay.
Yeah.
So they've got to get some things right in their world first.
Yeah.
And that's a really, like, I don't think your cash flow should be perfect, but you should have a clear indication to good cash flow to achieve that goal. But even really, really like 500 grand borrowing capacities, we can probably find something.
Yeah. And maybe it's that strategy of...
Even
maybe
if it's
not
recycling.
here where we're living.
Yeah.
Maybe it's buying a property in Adelaide or somewhere else where the market is a little bit different.
Yep.
If it allows you to do something to like the sort of steps towards your goals, maybe it is the right step.
I did a video last year on YouTube about where should you buy and why your backyard's not always the right place.
Yeah.
And I can't think of anything worse than driving past an investment property every day.
I know. The thought of it is awful. My thing though is, and this is where I keep getting stuck, and every time you say something like maximizing your momentum and just going and getting in, I'm like, that's me. I actually need to do that.
To be fair to you, you did half ask me a question and I said, yeah, you got access to the borrowing capacities and left you. Yeah. That was like 3-4 months ago. So.
What is my biggest mental roadblock at the moment is that I have about 3 or 4 years before my eldest daughter will be probably moving out looking...
You're so old, Bindi.
I know.
You would have been so angry at me 5 years ago, I reckon, if I had
said. It like I said, it ages you at a different rate when your kids are teenagers. But they're going to be moving out soon, right? And if they were moving out right now, like rent is so much. Like renting is not like it was when we moved out. You could rent a whole house in the suburbs for like $300, and that was a good big house when I first started moving out of home. Now, my kids won't be able to do that. They're certainly not around here.
Are you across what what you pay for rent these days?
Well, only from a conversation I had with someone yesterday. Like a little bit, yeah.
Enlighten me, please.
You don't know, right?
No,
it was
genuine, yeah.
So much. Like realistically, you're not going to get anything in around where I live for like even a very small older house or unit even or anything like that. Like you're like $750 minimum. Maybe late sixes, but like that for a first time worker, potentially uni student, like what are my kids going to do? Like they can't afford that, and they're not living in my house. Like they have to go somewhere. Yeah. And so what I want to do is I want to buy an investment property that I'm able to let them live in and control how much rent they pay.
Yeah.
Obviously they would still have to pay some rent, but I can control that they don't get these huge hikes, because that's the other thing as well is like in this market where we're seeing huge increase in the owner's equity, like they're charging alongside how much their property value is. Like they're increasing that massively. So each time someone renews their lease or whatever, like it could go up $50.
Yeah, but
Like that can make or break some low income households.
yeah, there's some pretty big legislation around rental increase. So rental yield is lagging at the moment behind valuations,
Yeah.
but costs are increasing for investors.
Mm-hmm.
So there is a disparity. Like investors are not raking it in at the moment from that. I'm doing a rental estimate on my house. Yeah, 700 to 800 a week, 750 to 800.
Yeah.
That's crazy.
Like, can you imagine that when we first moved out of home, you couldn't do that. And I know things were different then, but like
I lived with my financial planner. My now financial planner. I lived with him and his wife for like 150 a week or
exactly like that. Yeah. Anyway, so therefore my interest is in buying something within a reasonable distance of where I live now, because that's what the ultimate purpose for it would be. And I can't mentally I can't mentally get over the fact that I would be spending double what I paid for my house now on an investment property.
Would be more interested in giving the girls an opportunity to forge their own path and investing in the best assets around Australia,
right?
Than setting up their living situation.
Yeah, maybe I'm like too pinpoint on it.
I think you've gone too motherhood on that. Yeah, you're devouring mother. The devouring mother archetype.
Yeah, I just don't want my kids living at home. I don't want them living in my house. Get out.
Yeah, mine are 4. Same. It's too messy.
Yeah.
I would. Yeah, I had this exact conversation with Ryan, one of our clients, and he and I were going back and forth around property, and he was getting really depressed. And I said, mate, why are you upset? Like, what's the issue? And he's like, just, very much looking at property prices, how do the kids go in? And I'm like, it comes back to the concept of stewardship. If you're having a go, your kids are going to benefit from it.
Yeah.
You don't necessarily have to, quote unquote, solve their housing need. But step one, I think, for Anna and I is how can we make sure we're taken care of in our retirement? How can we make sure that we have the ability to not be a burden on the girls?
To not lean on them.
So that's point 1, right? Point 2, okay, we've done that. We're okay. We're going to pay our house off. Mm-hmm. I think we're currently 12 years earlier than planned. With the rate decreases recently, I've not felt the rate increases recently personally.
Yeah.
Because I never decreased my repayments.
Same, yeah.
So I'm loving it. I'm like,
yeah, it is.
My redraw is going to start decrease. Like my redraw is not going to increase as much as it was. That's the reality. So that's kind of like option 1. Option 2, we're going, okay, we've taken care of that. We're going to pay our house off. We're accumulating money in super. That is going to be a baseline nest egg. If nothing else, we're going to be okay through those 2 things. Our housing need is going to be taken care of, and we're going to keep creating money in our super. How can we multiply it to have a better lifestyle long term? Because we're in 2026. We have a robot vacuum. We've got a pretty good lifestyle.
Yeah.
How can we elevate and take care of the hard work we're doing now to make sure that there's something for the girls to be able to leverage off long term?
Yeah.
We can be guarantors for them.
Yeah.
We can make sure there's an opportunity to get them in the market. We'll create a business that potentially they want to work for if they want to one day, and have an opportunity to earn money and be well off there. There's just layers to it.
Yeah.
And I think Ryan, when I was talking to him, I was just saying, mate, you've had a crack. You have a home that you're about to buy your dream home. Where getting that done, you're in a really great position. You've got these investment properties around the country. They're not condensed in one place. They're all functioning really well. Like, why are you feeling the pressure over this? Because you've taken the steps to make sure that your kids are never going to have an issue with housing.
Yeah. It's an interesting, sidestep around the same problem, in that if I was to let my kids live in a house that I was renting to them and I charged them a reduced rate of rent, I would be losing some money myself, which I want to do. I want to help them. And I could do that, but I could obviously rent it to someone else for far more. If I had an investment property somewhere else that actually ended up by this time being potentially positively geared or something like that, I just give them that money. I'm doing the same thing. It's just shuffling it around in a different way.
I would actually argue, I think this is probably where, like, I don't know where the girls are going to land financially, mentally, like what their approach and management of money is. I'm going to do my damnedest. They better be listening to this podcast in 10 years' time. I'm going to work really hard to make sure that they're set up with not really aspirational financial goals, but just really solid stewardship.
Yeah.
Like, they don't have to be psychos like me.
Yeah.
It's like, that's irrelevant.
Let's hope they're not.
Sorry, Rainey. I just want them to have sound financial skills.
Yeah.
And if we are, like, if I go too far, here's housing, here's this, here's that, is that actually going to give that, like, how many times have you fallen flat on your face and had to learn how to fix it?
Yeah, but you always do too.
But if we rob our children of that, like the lesson of paying for rent, like, how much are we actually robbing them of the opportunities to become the people who we're happy to be in our lives?
Yeah, it's
like, I just think that's an element.
The other thing,
way off topic. But
the other thing I just thought of is my parents had an investment property, which, served a few purposes for them in that, it was, I think, positively geared for a long time and things like that. Like, it was a good little investment for them. But I think ultimately one of the reasons that they had it was so that myself and or my sister could live in it if we wanted to. And do you know what? Neither of us ever wanted to touch it. We were like, absolutely not. I don't want to live in that house. Gross. And went and lived somewhere else. We wanted none of it. So you could put in all of this effort into what you think your kids want to do, and then they don't anyway.
I would always argue that take care and manage your money to the best of your ability and give your family an opportunity to come along that journey with you. It's going to do far better than if you were to make sure they've got every little trampoline ready for when they fall over.
Yeah.
Like, you're not a helicopter parent.
I'm not, no.
You just want your kids out of the house.
Yeah.
So, yeah, I think just kind of that base starting point of, like, you can, why not? And, like, it's not you've got all your ducks lined up in a row and dominoes are suddenly falling over and everything. Like, momentum is real, so you've got to start trying to piece them together. But it's not piece them together, knock them over, then act. It's as you're piecing everything together, it's, okay, let's start knocking the dominoes over, and we haven't actually finished the trail yet. I think I like that analogy. I'm running with that one again.
Write that down.
And so for me, it's then going, okay, we've got the momentum. We're sitting down in the practical with myself, broker, and I'm looking at their momentum going, okay, I've got a process that's going to honour this. What is going to give us the best opportunity to access that equity and go and purchase? And really it's then, do we need to refinance, restructure the existing loans, cash out the equity so you've got it as a deposit, to pay for, buyer's agents, fees, anything that has to happen up front? How much liquid cash have you got? It all comes into that discussion around how do we cash out, how do we position it? And that is all a half hour, 45-minute discussion unless I build way too much.
Unless you go on a few tangents,
It's going to happen. It's really going to happen. And that is really just, like, it's not even a, hey, let's apply, get the cash, refinance, do all that, and then we'll go and get the pre-approval. We do it simultaneously. Like, it's so easy these days. How good is PEXA? It's so good. And from there, it's just a matter of, all right, I have this pre-approval. It's fully assessed. I've physically got the equity in my bank account, or this letter that I've been given says I can access it through this purchase. Let's go.
Yeah.
Like, that's all the equity is. It's either a physical draw out or it's a piece of paper saying you can access it. Let's go.
Yeah. Going back, I suppose, maybe a step before having that, if someone's in the thinking stages or wondering whether or not they're going to be wasting your time, how, like...
I do enough of it. You don't need to worry about that.
I feel like most people would be able to get a basic understanding of what their equity position is, in that, like you said, most people know roughly the value of their property. And if they didn't, they could probably pretty quickly figure it out to within a normal range.
Yep.
And then the sum of your property values minus the sum of your secured home lending debt against those properties would give you equity position, right? But my question is all of that usable? Like if I've got, let's say I've got $500,000 of equity that I've worked out in my property portfolio, do I have $500K? Like, can I use that to buy other properties?
Yeah, I think the usable equity is kind of this, like, there's a lot of caveats that can make it a bit more, like, it's not, most people go, yeah, usable equity, 80% of your property's value, you can access to and go from there.
Right.
But there are opportunities to access LMI easily. There's a lot of solutions out there that mean that you can kind of avoid LMI. And so for me, it's always going, okay, step one, to your point, property value minus debt. But let's look at 80% of the property's value first and then minus the debt, and that'll give us the baseline of usable equity. Can we do something with that? And then it's okay, yes, we can, sweet, let's run with it. Or no, we can't, we've got to go to XYZ bank, which could actually dictate whether we cross-collateralize or not.
Right.
That
informs that strategy as to whether or not we cash out. Yeah. Right.
And it might just be a point of, hey, we can access 80 to 95% of your property's value, but we need to pay LMI, or we need to cross-collateralize and use a bank that doesn't charge LMI. There's banks that may refund LMI if you pay off or take the loan elsewhere within 6 to 12 months. Like there's, if you're in a high growth, you're going to do something, we might be able to access some stuff, not fully pay all that LMI. There's a lot of strategies around LMI that I don't think it really gets the fair kind of cop for.
Yeah.
And then like there's professional LMI waivers. I talked about it earlier with Anna. We can go to 90% because she's a physio and ARPA registration. And so medical specialists, accountants, some bank staff get it from their employers.
Yeah.
And
so that allows you to go to 90%, which effectively means that sum of your property value at 80% minus debt now becomes sum of your property value at 90% minus debt.
Yep.
So you get an extra 10% of usable equity without paying fees.
Yeah, and it's like honestly, I think I referenced it earlier. We just have RP data up while we're doing the appointment. It's just really easy. And generally I ask, what's your property worth?
Yep.
And then I'll just go, sweet, they're probably right based on what I can see on RP data.
Yeah.
I think a lot of people are undercutting how much equity they've got these days.
Yeah.
Realestate.com.au has made it easier to know.
Yes. That's very different than what it used to be some years ago. Hey.
Yeah, you used to literally have to pay for a report or an appraisal, or you would just be trolling through.
Yeah.
And I think realestate.com helped a lot of people with that. But ultimately, I think like it feels like a much bigger problem than it really is. It's something where I think accessing equity, being able to leverage it, combining it with borrowing capacity, you might not think you've got a big borrowing capacity and go, hey, in 12 months I will because this is changing. Like, we've got self-employed clients who they're at the 2-year mark.
Yeah.
The 1 year is helping them refinance their existing stuff, but we're looking at the current position over the last 6 months going, next year is going to be a lot bigger borrowing capacity.
The forecast is good.
And they're going, get us a 6-month solution to keep investing in the market. And so there's all these things where you go, okay, I'll pay 8%. I don't care because the market long term, like that's 6 months, long term, I'm back in the market again.
Yeah.
And it's not really like I'm not going to project my risk appetite. It's what the client wants to do.
Yeah.
And accessing equity is getting easier and easier every day, like 1% assessment buffers. And there's just all these little levers that we can pull to help with borrowing capacity. And that's just ultimately all it is to unlock equity.
It's sort of a lot of our conversations, I feel, comes down to like, have you got the right team to inform your strategy again, right? Like it's if any of these things that you're explaining to people, they're not sure how to go about them, it comes down to the broader team of people that you're working with. Yeah. As in like getting a buyer's agent to help you to see what other people are doing or what success other clients have had and things like that.
Yeah, and financial advisors, I find, like we work with a few that they'll go, hey, we've got this strategy. And a lot of them, like some of them will lean on me for the buyer's agent conversation because they know the client needs that expert. But they're really good at figuring out borrowing capacity. They're really, really good at figuring it out these days. And so I think that element of getting the right advice, you've got the right team. As a broker, like I firmly believe that we are the current location. Like if you need to know where you're at and what you can do before you start that destination, back to your early point, like when do you chat to a broker? Just do it.
Yeah.
Just have the conversation, get into the process, get the momentum.
Yeah.
And you just don't know what your options are going to be until you've actually had them presented.
Yeah.
And it might, like I think increasingly what we're doing is going, we're actually meeting too, traditionally is like appointment, game plan review. And so appointment will understand, discuss, maybe you've been introduced and I've had a quick conversation, I've got a bit of an idea, we can build on that in the appointment, and then awesome, we're going to present options to you in 2 days, like, or whatever, 24 hours, whatever, we can to get you the options. Increasingly it's going, hey, these are all the options in an email, but these aren't the products you need to choose, but this is the options that we need to decide out of before we actually start the research. Yeah. Because people have way more options than they can.
Yeah. So they actually have to like narrow it down and sort of choose a path almost. And then you get presented with your actual.
Yeah. And it used to be like, hey, you've got a borrowing capacity of 1.8. Let's just get you approved for 1.8. Yeah. And then you can decide whether you want to do $1 million property or two $800,000 properties or whatever that looks like, or 600. Increasingly it's like, hey, you've got $500,000 worth of equity that's going to buy $1 million commercial property or whatever. What do you actually want to do? What is the option? And so when it's going into things like commercial, suddenly your personal borrowing capacity isn't as important, but your equity is really important.
Yeah.
So if you can service that initial one, like there's just all these little policy niches the other day, like that are coming through that are apparent, that allow us to just maximize and leverage your financial position to achieve that goal. Yeah. I'm doing it on my own. I can definitely do it on clients. There's a reason, I have not shown our borrowing capacity calculators to Anna. I don't. I think it would overwhelm some of the stuff that I practice. I practice to see what, like, especially with self-employed, I've got a more complex structure. Not complex, just more pieces. And I think without having that structure personally and managing that, how to access equity and all that kind of jazz gets a little bit complicated. And then I'm just like, okay, let's just play around with my numbers so I know when the next client comes along with something similar.
Yeah. Oh,
I know the answer.
That's a smart way of doing it, actually. Yeah.
So think kind of summarizing everything through. For me, equity without a destination, it is purely just potential, right?
Yeah.
And so when I look at borrowing capacity equity without a destination, it's just potential. Borrowing capacity without a strategy is just permission. And so what we're talking about today is just turning both of those things into a plan. And that's where I think the right team stops being optional, to your point. You actually just go, I've got these things, I've got options, I've got potential. Why am I not using it? Yeah. And it's not like, as a broker, I'm not making an assessment as to whether you should be in debt or not. We will facilitate it. I just think as mums and dads, as, sons and daughters as well, who've seen their parents kind of go before, it's just about actually taking and giving our kids a chance. Yeah. Beyond the, hey, you're clothed, fed.
Yeah,
now.
Exactly. Yeah.
What are we actually taking care of in the future to make sure that I'm not under a bridge or living in your house in 30, 40 years' time?
Yeah, for sure.
So, look, I think we would love if any of this is resounding within people's heads to share this around and get it out. We are enjoying making these episodes.
And
Bindi
learning.
and Bindi keeps trying to quit, so we're not going to let her. But we want to help as many people as possible use leverage, manage their money, understand what their options are, and just get educated around this stuff that we talk about all in every day. So if this could be shared, let us know. Or let everyone know about it. We just want people to understand these concepts. They're not hard. They're not hard at all. They're just really, really things that need to be learnt and dove into. And through time, they just become really simple. And quite often you just need reps. You just need to buy a property. You just need a second property to know how easy it can be. So subscribe, share. Talk to you in the next one. Oh, and actually, let's get a buyer's agent in.
Oh, yes. Start introducing the team.
Yeah.
Yeah.
Let's get our team in. So we'll do the call to action in a second again. But we'll get a buyer's agent in just to talk about the rationale. I think that he is and I see this guy that I've got in mind talk about this with his clients all the time about how he makes decisions on their strategies and recommends and does all that. I think that's going to be an awesome conversation.
Yeah.
So we'll tee that up and don't miss it, because accessing equity, borrowing capacity, let's turn that into potential.